a lot of people might not know this that are international investors, but Australia doesn't have much in the way of their own, native AI kind of players. We saw what happened with Appen. They were supposed to be a bastion of machine learning, but it's basically people sitting there clicking on captures and not what we've got now. So how do you play AI with Australia?
That's quite an interesting point, where Appen was deemed to be the AI poster child of Australia. We passed on investing in that. It was just essentially CapEx for Facebook. And that's sort of run out now. But I think AI in general is, you can put it in the same boat really as like an AWS, what AWS did for compute in a broad sense. With AI is going to bring a lot of efficiencies through the market. So it doesn't necessarily need to be a first order approach to AI and investment, whether it's an NVIDIA or something like that. But the companies that we think are going to benefit from that, there are some listed on the ASX, whether it's Xero as an example. They've got lots of data that they can then use to train and provide insights around that data moat, or WiseTech, for example. So there are companies that will make use of AI, not necessarily in selling like a co-pilot type tool, but using it for insights to help make their businesses much more efficient. So, where we sit, it tends to be much more businesses that are technology enabled, businesses that have these sustainable competitive advantages, and the AI changes that basis of competition to being more using data, having customer information that you can leverage for insights, rather than selling a particular tool, whether it's testing and chipsets or GPUs or TPUs and so forth. But in Australia, there are some fantastic companies. Where one of them we'll talk about today probably is IDP Education, where they can leverage that data set. So it's a bit more of a stealth way of applying AI, but it's really going to be a general competency that's required as a basis of competition now. If you're not using it to your advantage, you're going to get left behind. And there's some companies that are much better equipped to use AI within their outlook than others, and that's where we want to be.
I've been told I've got time for one more, so I'm going to ask a different one. CSL, everyone knows CSL. Every fund manager in Australia probably has a position in CSL. So I'm going to ask you about GQG. Now, how much of this, because it's not often that people, recommend LICs in terms of, on this programming, in terms of picking them up, because generally they run below what their book is. But how much of this is just betting on the guy running the shop, considering the bets that he's made on Adani and the amount of money, we spoke to him just a couple of weeks ago, and how much of this is just your expectation that the valuation is right now in terms of, putting some cash in?
Yeah, so GQG is a phenomenal business. Rajiv Jain doesn't only have a distribution alpha proposition, he's got an investment alpha proposition. And really for us, it's a thesis in that GQG, unlike some of the other listed fund managers in Australia, are in a mode of accumulating FUM, and they've got roughly 100 billion in AUM today. And conservatively, we see them getting, another 40% on that in our forecast horizon at a conservative basis. And largely, that's not necessarily just coming from a valuation piece; it's coming from their ability to capture FUM and move into other products like their, the US investment product that they launched. It's got about $8 billion in it now. But GQG is on, from Bloomberg numbers, I think from memory, like 12.5 times P, and it's also an 8% yield. So there's a real asymmetry there that keeps the downside protection to it. But if the market starts to price this appropriately, there's some real upside there. But for us, we've got a significant IRR, and it's one of the biggest positions in our fund. So there's sort of two pieces to that. There's the valuation side. If the market prices it at the premium, which it should, because it's growing FUM at a rapid rate, and we don't see that slowing down at any time soon.